Hey guys, what's going on? Glad you could make it. For those of you who are unaware of who I am, this is your first time visiting my channel, welcome. For those of you who are returning, welcome back. My name is Brad Smith. Um, I'm part of the Techbuds-Solutions team. If you've never been part of Techbuds-Solutions, I'll post a link to participate in our Facebook page as well as our Discord chat group, which I think you'll find pretty useful. We're a network of like-minded individuals who are not only interested in just trading, but all kinds of areas of entrepreneurship, right? So that includes, houses, investing in real estate, investing in businesses, and most importantly, investing in yourself. Um, so the topic tonight, how to trade penny stocks. The reason I wanted to start, this video this way and kind of like just address how to trade penny stocks. Those of you who know me, yes, I only really trade in over-the-counter stocks, or otherwise known as OTCs. Um, but I kind of wanted to apply this to all penny stocks, and because the volatility is relatively the same when it comes to penny and micro penny stocks. Most OTCs are micro pennies. They're trading well below a penny, so it'll be either double zero whatever price per share, or even triple zero price per share. If you've never traded anything that small before, well, welcome. You made it into the right place. Um, basically, just wanted to talk tonight about some fundamentals, and then leave the questions up to you guys, and see, where it goes from there. I kind of wanted to leave this as like a, town hall type thing. We'll just kind of go back and forth and discuss any kind of like basic questions. No question is too stupid. I just kind of wanted to cover that because I've recently, and thank you, quite a few new subscribers. And so because of that, I wanted to kind of address some things that will help you on your journey to trading penny stocks. So with that, there's a couple of things that I wanted to address. I don't want to go into too much detail when it comes to technical analysis and stuff. I feel like there's a lot of that already out there on YouTube. And of course, I'll address that, you know, later. But tonight, for all intents and purposes, I just wanted to, like I said, address the basics. And so one of the biggest things that you need to understand, if you have never traded anything in your life, if this is your first day, um, uh, you know, getting into penny stocks or micro penny stocks or OTCs, is that you need to understand that anything that you invest in um, needs to be something that you understand. So if you don't understand a particular stock, if you don't understand the way that this general area of the market works, my suggestion to you is to do some homework. It's what we call due diligence. You know, really get down and do the work, because trading penny stocks, trading micro penny stocks or OTCs is not for the faint of heart. It's not um, some kind of get rich quick thing. Obviously we see, if you look back at my channel, we see a lot of great big wins here. And yes, that does happen. It almost happens, and it does happen on a regular basis. But those people that it happens to are those that put the work in and did the time. A lot of people like to say, "Oh, well, playing down here is just a gamble. It's just like going to a casino." Blah blah blah. You know what? There is this thing called risk, and risk is in every part of the stock market. So if you are taking a risk and you want to label that as gambling, by all means, label it as gambling. For me personally, I don't see it as gambling. I see it as taking calculated risks to achieve success. And so that's my primary goal for creating this channel. I just want to be able to help others the way that others have helped me find success. And I know what works for me. And just because it works for me may not mean that it works for you. And so that's kind of the basis, right? That's the foundation you want. Don't invest in anything you don't understand. That's kind of like the big motto here within Techbuds-Solutions across the board. Don't trade what you don't understand. Don't take anybody else's opinion. Don't trade based off of anybody else's opinion. And so, um, I just kind of wanted to address that real quick. So here's some key questions that I don't suggest you ask anybody then, right? So I always see within our chat group, within other channels within our chat group, people just asking thoughts on and then insert ticker here. That is the most blanket, um, general cop out statement, really. That does not involve you doing any work, right? So when you ask a question like that, to those of us who are willing to help you guys, myself included, that's just kind of like a question that you ask because you want to take the easy way out. And the reality of that is that it's going to hurt you more than help you, because if you're taking the advice of somebody else that says, I think this is going to run, you should buy into this, that should be the first red flag for you. Because if you buy into something that you based off of somebody else's opinion, you're setting yourself up for failure. If you lose, on that particular stock, you have nobody else to blame but yourself. And I think that's one discipline you need to understand, is that, like, just because somebody says, this is going to go, doesn't mean that it's going to go. Or, everybody likes this term, to the moon, right? So that's the other red flag. This is not going to the moon, because in reality, especially with micro penny stocks, it's very rare to see a micro penny stock go from like 0.0000 per share to over a penny or more. And so, which kind of segues into my next point. When you're in this type of market, the volatility is what I love, but the volatility is also what can burn you. And so, especially when you're first starting out trading, take the little wins, because I do like to celebrate the success of people who have gotten these big wins. We've seen $17,000 wins, we've seen $8,000 wins, we've even seen a $28,000 win. And so, yes, that happens, but that doesn't happen right away, right? So if you're just starting out, say you only have $1,000 in your account, or even smaller, take those little wins. Don't go after the big home run. You're going to want to go after, um, the base hits. If we're talking about baseball, right? So the small ball, like, if you guys are familiar with baseball or whatever, the base hits is really what matters in baseball, because you're going to get more men on the field, or you're going to get more men on base, which leads to more runs. And the runs in the stock market world is green, right? Those are the green wins that you want. So if you're only seeing a couple $100 here, a couple hundred, even if it's $50, take the win. You know, I don't want people to just sit here and get stuck into something and then thinking that it's just going to sit here and make you $100,000 or $1 million or whatever. You see that all the time with these gimmicky kind of, and I won't mention any names, with these gimmicky, you know, stock guys that'll be like, oh, how I went from $300 to $300,000 in a month. And it's like, sure, that happens, but it's not the most realistic goal to have. You want to start to build and start small. And then once you start to build onto that, eventually it gets bigger and it gets bigger. And then you'll be able to trade with more capital or equity, and you will see that success. You have to be able to be a little bit more disciplined and being like, you know what? I see green here. I'm going to take it. And build on that. Don't just wait for, the big run, because oftentimes you'll get stuck in something like that. You'll see, that maybe you're up or you're green, five, $6,000 or something. Let's say, for example, and you're like, oh, I don't want to get out, because what if, this is going to go higher, and you have this FOMO, is what we call fear of missing out. And so you have to be able to understand that there's a possibility that it could continue to run, but take the money while you have it. Especially when you're starting out. Don't just expect you to be some kind of crazy millionaire overnight, or be able to quit your job the next day or whatever. um, I've seen it so many times where people are up an obscene amount of money and they just stay in thinking that, oh, this is going to be the big payday. You know, I'm guilty of that myself. And sometimes I do that, but I can afford to do that to a certain extent. Like I said, because I've gotten to a point to where I'm comfortable with that. Your risk tolerance changes when you are building, when you get to a certain point in your account, when you built it to a certain point, and you're like, you know what, I can hang out in this thing, and you want to, and so at that point, if you feel like your risk tolerance is to a point to where you're like, I can afford to keep this here and use my other funds to trade elsewhere, fine. But if you're just starting out and all you got is $1,000 and you're only in one position and all that $1,000 in one position, and you're just waiting for some kind of magic to happen, there's a very good chance that it's not going to. So just take the green when you can, and keep building on that. You know, there's always going to be something that runs. There's always going to be the next great thing, right? So that's another key point that I wanted to stress to you guys when it comes to trading. Um, and so I wanted to go somewhere else with that, but I can't remember. Can't remember. Um, I go off on tangents sometimes. You have to forgive me. But anyway, that's kind of like the gist of when you're first starting out in trading, especially penny stocks, something that's so volatile in the OTCs in particular, is that, you know, just take the gifts that are given to you because there will be more to come. So that's kind of my little spiel on that. I hope that that made sense to a lot of you, especially those of you who are just starting out. And so um, just kind of wanted to review some of these comments here and see if there's any questions. Oh, here's a good question. Do you have a favorite strategy to trading penny stocks? So, one good strategy that I have that I found success in is that if you are in a particular stock or in a position, and you see it, for me, especially in like OTCs and micro penny stocks, it's not uncommon to see your money double or even go up by 50%. So if you see that much green in a position, then what I like to tell people, or what I have done in the past, is sell your initial uh, equity. You know, sell your initial buy-in, and then the rest of that is in there is just pure profit. And then at that point, it's up to you. At least you have your initial buy-in, and then whatever else, whatever green you see there, if you're happy with that, or if you have your plan set in place to where you're like, okay, I'm out, and now I'm playing with free money. And so you can then determine, am I happy with this profit right now, or do I anticipate it going up more, or is this a safe place for me to pull the rest of my money out? I think that minimizes your risk, and it kind of makes you feel a bit better about um, playing with that free money, because you've sold your equity, your initial buy-in, and then that's safe. And so the rest of it is whatever you want it to be. So that's kind of a good strategy that I have seen success in, and that I have seen plenty of other people succeed in, and even the most tenured traders do that. So that is a good strategy, in my opinion, to have. And again, you know, this is just one way of doing it. It's not the only way of doing it. You'll find if you join us within our Discord chat group, that there are many strategies out there. But that's just one small example of what I have been able to find success in doing. So I hope that helped. Let's go ahead and check out some other ones. Somebody said, so true. You can't go by others' opinions. Must do your own DD, which is due diligence. Yes, absolutely. That is one thing that we always like to promote here at TechBuds, is doing your own work, doing the homework, putting the work in, because there is no such thing as a get rich quick scheme. And doing your own work, it just gives you that sense of fulfillment too, right? And I know it sounds a little cliche to say that, but it's true. Doing your own work and winning on a stock or position because you did the work and you put the time in gives you, I guess, that motivation that says, you know what, I can do this, and it gives you that motivation to keep going with it. And so we don't like to spoon feed anybody here. We don't like to throw tickers out and say, hey, this one's going, you should get into it. No, do your own due diligence and buy in something that you understand and that you've done your own work on. So, yes, I appreciate that sentiment. Um, put the work in, or it's going to hurt. Yep, absolutely. All right. What else? What else can we address here? So that's what my biggest mistakes in my career as a trader. And to that point, I had a bad habit of just holding on to things, and that's why it was like one of the first things I addressed is take the gifts that are given to you. So that by far is my biggest mistake in trading so far is that, like, just holding on and waiting for some crazy magic to happen. Um, Again, now that I've traded quite a bit, you know, like I said, take out that initial investment so that I know that that's safe and then keep riding profit because at that point, you can only go up from there, right? So once you're out in your initial investment, you can keep uh, that profit in there, and then whatever you do with it, it's still profit. So that's like something that I truly feel, in my opinion, works. And so that is probably my biggest mistake is just um, waiting too long to get out of something. And so that's why I stress so hard to understand for you guys to understand um, and not make that same mistake that I made. Uh, how do you know when to let the winners run? Again, that's another one of those things. You can do some technical analysis on something that's running and check out the volume. If the volume's still pouring in and there's a lot more buying going on, and you see that momentum uh, that keeps going, then ride that momentum. My thoughts are that once you see the momentum start to slow, that's maybe when you might want to consider exiting a position. uh, it could be that that momentum is slowing and then it's going to run what we like to call the next leg up. It's a term we like to use, and that could be potentially what happens. But again, if you're just riding strictly on profit at that point, see what happens. If that's something that you're comfortable with, if your risk tolerance is at that point to where you're like, yeah, I see the momentum slowing here, but it could mean that more volume is going to pour in. A lot of times we'll see a slowdown around lunchtime in the market, especially in the OTC world, but it's across the board. And then after lunch, you'll see another momentum shift, and it either goes one way or the other, obviously. But uh, oftentimes, if it's a big runner and there's a slowdown around lunchtime, there's a very good chance that it'll continue running after lunch. And so that's just something to look for. It's not, a surefire, this is exactly what's going to happen, but it's very common to see. Um, in your opinion, what's the most effective way to scan for OTC penny stocks and day trades? Very good question. There is a very effective scanner out there. It's called Equity Feed. Go to equityfeed.com. They give you a 14-day free trial. And I suggest anybody who's looking to get into OTCs or penny stocks to, if you have the means to do so, to invest in Equity Feed. It spits out all kinds of stuff. I mean, you can just set up a scanner all kinds of different ways with that. It's a very powerful tool. Also spits out news when it arrives, especially if it's one particular stock that you're watching. Usually, Equity Feed is the first one that will blip on your radar when it comes to that. So, Equity Feed is a very good and very good useful tool that I suggest anybody using. And they don't sponsor me. I don't have any sponsors. This is purely because I truly feel that it's a very powerful tool to use when trading. Okay, very good questions, guys. This is awesome. I love that I did this. Um, all right. For those of us who have limited day trades, is holding a penny stock overnight to sell the next day okay? again, this is for me. I don't see a problem with it if it's something that you've done the work on, and you feel that based on your own due diligence is something that you see that is safe to do. I know there's a lot of us traders, especially, and even Ricky, to an extent, will not hold penny stocks overnight. That's just a principle that he's built in with his own strategy. There's plenty of us that don't utilize that strategy, and that's just how he minimizes his own risk, which is why I said it depends on your risk tolerance. So my risk tolerance is that I mostly only swing penny stocks, and I'll hold into something for days or even weeks at a time. So that I know that might not be the answer you're looking for, but it kind of just depends. That's the best answer I can get for you. Again, it depends on your risk tolerance and the amount of work that you've done into it and what you see value in. So let's see here. Yeah, somebody said you're fine if it's the next day. Yeah, I mean, again, it just depends on your own risk tolerance and where you see something going. Did you start OTC trading, or have you ever traded the big boards? I've actually never traded it. No, that's a lie. When I very first started out, I was trading big board stocks because I thought that's just what everybody did. And, because you always see these um, bigger traders trading these larger stocks because it is the more safe route. And it is to an extent. The only problem for me personally, and this is why I shifted over to OTCs, and it didn't take long for me to do this, is because I surrounded myself around people who were very successful in trading penny stocks and OTC stocks, and I found that it's what worked for me the most, and I just think that OTCs can be very exciting in them, and because of that, I like being able to see much larger gains than your typical 5 to 10% that a lot of people look for when they're trading on bigger board stocks. For me, I'm looking for something that's going to double my money or more. That's just the way that I look for stocks, and that's what works for me. Again, trading penny stocks, trading OTC stocks, it's something that's not for the faint of heart, from what I said from the beginning, and it's not for everybody. And so I don't suggest everybody, trade penny stocks just because I say to. Again, it all comes down to risk tolerance, and if you are willing to take a risk on something, and my risk tolerance is far greater than that 5 to 10%, and so that's why I felt that I basically just fell in love with OTC stocks based on when the people that I surrounded around myself and the success that I saw with them. And so that's what made me shift over to trading OTCs. Um, Somebody asked, "Do you analyze the same as ETFs?" These principles that I'm giving you guys, they actually can be applied to just about any style of trading. It's not strictly for penny stocks or OTCs, but it's definitely something that can be applied to any type of trading, right? So it all comes down to, again, risk tolerance and doing your own due diligence and trading something you see value in. And this is something that you can apply to just about anything. So when it comes to ETFs, absolutely, you can apply that as well. Um, and so that's kind of like the beauty of it. You can um, apply this across the board. And so I think it's more specific to penny stocks because of the volatility that occurs down here. And for me, I personally find it easier to trade these type of stocks, especially if you're working a 9 to 5, such as myself, because you're not constantly waiting for that tiny little run of 5 to 10%, constantly watching it. I can set an alert on my phone while I'm just sitting at work. And if the alert comes on, I can choose whether to sell or keep going with it. And so that's kind of like how I manage it while I'm working. All right. These guys, this is great. I should have done this a long time ago. You guys have more questions now than you ever had. What's a good place to learn and to understand the debt proportion of OTC filings? That's a really specific question. I think that's going to be dedicated to its own video. So, good question. I'm going to keep that in my little memory bank and get back to you on that. And it'll probably be featured in an actual video, recorded video. So, hang tight. I'll get to that one later. Uh, what's the best way to research and review a penny stock? Somebody asked. So, another great question. So, more specifically to OTCs, in my opinion, I utilize several resources that I have featured in all of my videos. The first thing that you should check out is otcmarkets.com, and it's specific to OTCs, not necessarily all penny stocks, but it's specific to OTCs. OTC companies, when news breaks out, it traditionally does not show up on your major trading platforms such as TD Ameritrade and E-Trade, but they will almost 100% show up on the OTC Markets website. So if you just go to otcmarkets.com, you can do a lot of due diligence on that particular site alone. All the quarterly filings, 8Ks, 10Ks, 10Qs, they all will appear on any particular ticker symbol that you're going to want to look up on the OTC market. The other one I like to utilize is another social media platform called Investors Hub. That's kind of a way to find news, as it breaks or when it's breaking, or to discuss with other like-minded individuals who are interested in looking in that stock. Again, it's another one of those things where you have to be careful because it's easy to fall into that trap of, oh, well, there's so many people that are interested in the stock. There's so many people that see the so much potential in this thing, and sometimes it can be a little bit of a fallacy because a lot of us are, we're emotional creatures. So if somebody sees that, oh, this is trading in triple zeros and it's going to go to a penny, then everybody starts saying it. It doesn't mean that it's true. And so that's another one to be cognizant of. But Investors Hub still is a great tool to use when doing due diligence on that, because there's a lot of people that share information back and forth, and then and certain links to websites or whatever, and deductions that they based on the work that they've done. And so then you can kind of go back and um, backtrack the work that they've done and validate that for yourself to see if that's something that you see value in. So I think that Investors Hub, while it has its downfalls, is a very useful tool as well. So those are the two main source resources that I suggest anybody who's trading OTCs in particular to utilize when looking through and doing due diligence on a stock. And that's a good starting point. Obviously you want to do some more digging, research these stocks, and this is a very fundamental approach when it comes to trading OTCs. All right, so good questions, guys. Um, does trading OTCs count fall under the PDT rule? Absolutely, they absolutely do. So if you are still under that $25,000 mark and you are subject to the PDT rule, which, or for those of you who don't know, is the pattern day trading rule, then you can't make more than, if you have a cash account, you can't make more than 3 round trips in a particular stock more than 3 times a week. So if you buy into a stock in the morning and you sell it before the market closed, that counts as 1 round trip. You can only do that 3 times a week, or 3 times within a 5 business day period. I should be more specific. Sorry about that. Um, and or else that your account will be locked for 90 days and you can't make any trades. So that's kind of another good way or good reason why I think trading the style that I trade and a lot of us trade in the OTCs, because most of the time we're swinging these stocks. So if you're swinging a stock, you don't have to worry about the PDT rule. That's just kind of how I view it. Okay, let's see. Got so many questions, guys. This is great, though. I love it. How do you know the volume? So somebody asked, how do you know, the volume of a particular stock? So there's plenty of areas. So like, say for example, I'm just going to use TD Ameritrade as an example. Um, you'll see volume on the side of a ticker. It'll say volume, and it'll show you the amount of volume that's being traded in that stock that day. Also, if you're doing technical analysis, you can set up an indicator on your chart, and there will be bars of volume as the stock's trading throughout the day, and you'll be able to see how much volume is coming in. You can also set volume to come in on your scanners. Volume is basically the amount of trades that are being made in that particular stock. So volume is a very important thing when it comes down to understanding liquidity in a stock, which means the ease of whether to get in or out. So if there's a lot of volume in a stock, it's typically much easier to either buy in or sell a stock if there's more volume in it. If there's not a lot of volume, that means you might have to wait a while before that order gets filled. So I know that there's much more technical terms, guys, but for those of you who are still new to this, I kind of want to make it as simple as possible. So I don't want you thinking that I have no idea what I'm talking about. Um, oh, thanks, Dave. I appreciate the donation there. Thanks a lot. Um, will you do a video on a scanner setup? See, and I thought about doing a scanner setup. The only thing is that I'm just worried because I don't want people to think that that's the only way to do it. If it's a really high demand for setting up a scanner, then I might do it. It's just one of those things that I'm just nervous about because I don't want people to fall into that trap of like oh well this is the way that I always want to do it um, because that's what Brad said to do. I just don't. I'm not comfortable yet doing that, but if it's something that I strongly feel later on down the road that you guys will be able to utilize and understand that that's not the only way to do it, then maybe I will go ahead and do that for you. Um, but up to this point, it's something that I haven't really looked into yet. All right, guys, this is great. This is awesome. Um, just looking through here. Thoughts on D gas? Very funny. All right, guys. Looks like it's starting to slow down here a little bit. Um, so I think we'll leave it at that. We've been talking for about a half hour here. So, um, oh, you know what? I'm going to address this question too. Somebody asked, does it matter what broker you invest with? When trading OTC specifically, absolutely. So there's certain trading platforms that won't allow you to trade over-the-counter stocks. I always get this question, and the famous question that we always get is that, why isn't the stock on Robinhood? It's because Robinhood and a lot of those other free platforms and won't allow you to trade over the counter stocks and a lot of micro penny stocks. So if it's not traded on the S&P, Nasdaq, or Dow, you won't be able to trade it on Robinhood, and OTCs aren't traded on any of that. So it's definitely important to research your broker to make sure that you can trade those. Two in particular that I find the most useful when trading OTC stocks is TD Ameritrade and E-Trade. E-Trade basically allows you to trade anything. They have the lowest, I believe, commission rates at 4.95. But if you're trading with TD Ameritrade, oftentimes, a little secret, you can call them and tell them, hey, I'm thinking about switching because X, Y, and Z brokerage has lower commission rates, and oftentimes, more times than not, they'll honor that. So that's a good tip, I think, to provide for you if you are not happy with your commission rates and are thinking about switching. I have, um, in my experience, E-Trade basically allows you to trade just about anything, and so that's one that I would highly recommend getting. And then TD Ameritrade has better technical analysis tools and just more resources. And so if you have the funds for it and you want to have both platforms, that's something that I wouldn't discourage you. Um, What's a good chart pattern setup for going? What is that? What is a good chart pattern setup to look out for going to go long? Bollinger Bands is one that I use most often. I think Bollinger Bands basically gives you everything you need when it comes to the uh, trading OTCs and really trading in general. I just don't see the need of having your chart look like a bunch of spaghetti on a graph. And Bollinger Bands, in my opinion, gives you everything you need, and it still keeps it nice and neat and easy to follow. Um, a lot of people chiming in on the TD Ameritrade. Yeah, it's definitely something that I would suggest doing if you have TD Ameritrade and you're still paying their standard commission rates. Uh, Definitely give them a shout out and just see what they can do for you. Um, So he asked how you feel about marijuana stocks in general in the OTC. In general, it's hard to find because here's the thing, and it's starting to get this way with crypto stocks as well. Um, is that the market's getting flooded with them or is flooded with them? So it's hard to find a good one. The marijuana stocks, you can find a lot of success in them. It's just that you have to make sure that you're finding a good one, and that you are looking at share structure. Where are they going with whatever they're doing? One that we're in right, a lot of us are in right now is the ticker. It's VTNL. It's Vet Online Supplies. They are a marijuana stock, I guess technically. They're using CBD oil for pets, and it's been very effective in a lot of pets. And it's something that I think could be a good play in the future. Right now, they're very dilutive. They have a lot of good news coming out, and it hasn't really affected the price of the stock, which is a shame. But I think once they can get past that dilution, that maybe it should see some more value, and the price per share will finally start moving. Um, all right, guys. Well, this is great. I really appreciate you coming out tonight and just discussing. This was awesome. I didn't think that it would be as productive as it was. I hope it was productive for you. For, I know that lots of times it can be exciting to just talk about specifics on whatever ticker, but I like this general chat that we had tonight. Just being able to talk about, um, you know, uh, just general stuff because like I said, we've had a lot of new subscribers and I want to make sure that everybody's kind of up to speed and not just throwing darts at tickers because people said, oh, this is going to run. So all right, guys, so let's just kind of recap here. So if you're just starting out, what do you want to do? You want to have a plan, stick to that plan, do your own due diligence, and don't make trades based off of anybody else's opinion. And what was the other one? Oh, yeah, just have a plan. And So, with that, guys, I just want to thank you so much for tuning in. Again, if you're new to this channel, we do this every Monday night. A little late tonight. I was out with a friend. It was his birthday. And so I got to talking a little bit, but just kind of wanted to celebrate a little bit with him. I'm a cigar smoker, so we had a cigar after work. And so it took a little bit longer than I expected. So usually it's around 7:30, 8 o'clock hour. But again, I appreciate you staying up with me and hanging out. And I will see you all before the bell. That is all I got for you guys tonight. And B. Smith is out.